What's going on, guys? New video up. There are a ton of stocks breaking out into potential stage 2 uptrends. If you're privy to the Weinstein stage analysis, Richard Wyckoff market model, that accumulation into a markup period, that stage 1 into a stage 2 breakout, you know that this potentially is the most bullish time to be buying stocks off of these breakouts because you don't know how long these uptrends are going to manifest themselves. As Stan Weinstein would always say, match the industry and the sector strength with the actual stage 2 breakout, and you have a perfect winning combination. Okay, so that's what we're going to be doing today. We're not going to be going through scanners, but I do want to point out there's still people that are afraid that the market's going to fall. Just a simple 50-day high scan. Steal this if you want. I don't care. We're looking for relative strength. We're looking for average volume over 1 million, 50-day highs, etc. We have 56 names, and I mean, some days this is up and over 100. Right? It's crazy how many stocks are hitting 50-day and 52-week highs. And so we're finding most of these setups within this particular scan. I want to go over 4 over the next 5-ish minutes. So this is going to go really fast, but hopefully you're going to be able to buy at least one of these, okay? None of these have necessarily broken out yet. They are ready to go. All 4 of these are focus group stocks within TTI. So here is your opportunity to trade a stock into a potential stage 2 breakout with us. All right, we're not already, well, we are in some of these, but they just haven't taken off yet. So without further ado, let's go ahead and start with Gitlab here. Very nice stage 1 breakout, into a stage 2 breakout, stage 1 accumulation base here going back almost 2 years. It's a recent IPO. This is our big blue skies setup. Looking at recent IPO mid-cap names, it's a mid-cap at $8.978 billion, average volume 2.46 million over the last 30 days. So you know there's a lot of people trading this, right? 4.72 ADR means it's relatively volatile. We like that. If you're trading shares, this thing is actually going to move. You're not going to get stuck in something like a Costco at all-time highs, which you might hold for 6 months before you make 20%. Gitlab can move 20% in 4 days, according to the volatility here. It could. And so what we're looking at here is prices above the 200-day moving average. The RSI is peaked out at 75, and there is very little volume up and over the risk-on level, which is what we like to see. Verify that accumulation by looking over here at the right side of the VRVP, and yes, financial institution footprint is there. The way we want to play this is above 59-ish. We want to get long Gitlab, and we want to follow the fib extensions to the upside for price targets. So above 59, we're going to be targeting the $75 to $80 area. Above that, we're going to pit stop at the 100 area because it's a nice big round number, and then 110, etc. The stop out here is probably not going to be the 786 fib like we normally run, because we'd be holding contracts if you're trading contracts through a gap, and that generally decimates that value. So what we're looking to do is stop out somewhere below 56.50. Arbitrarily throw a number on there at 56.24 is totally fine. Not a nice big round number, right? Stops tend to get hit. And the way we close out on these is if closing price at the end of the day closes below, we'll say 56.24, 56.32, we'll manually close those out. It's not intraday, it's on the close. The way that we're actually looking at playing this on the chain, if we can pull up Tasty Trade here, is, let's go over to the Gitlab GTLB options chain. We're looking for the Marches or later. We're not opening up anything within that March window, March to right now. It's March or later, right? So no Februarys, no Januarys. We're looking to hold these things for at least 90 days, all right? These stage 2 breakouts can take a little bit to get moving, and when they do, you do not want to miss out. And so we're positioning ourselves with a little bit more time than we originally expect, so at least 90 days. Like I said, the price target here is $80. Now, Gitlab doesn't have any open interest or volume on the $80 contracts, so we don't really want to buy those anyway because they're outside of the standard deviation band. So what we would do here is with a 57.5 IV and a 2.9 IV rank, we're looking for straight calls. We do not want to call debit spread this unless we absolutely have to. And this isn't a chain that we're really going to be looking at call debit spreading anyway because there's not a lot of open interest and volume. We're some of the first people that are looking to get into this trade, and that's why we like it. $75 calls right now going for 225. It's a 0.25 delta. There's some volume. Some of that is TTI today, so we are starting to accumulate the position. Open interest is rather low, but we expect open interest to kick up. Just make sure that you're able to verify that there's volume and open interest when you're looking at contracts. That's why we're going for, like I said, the 75. So Gitlab here, we like it. There's a good opportunity for a big blue sky breakout on a brand new IPO going back to 2021, software related mid-cap stock. Next one, Snow. Meme stock here. Everybody's traded Snow. You can kind of see the notes that we've been talking through within TTI. It's the same idea here, though. It's a nice big range, right? Going back nearly 2 years. Everybody and their mother wants to own Snow. We want to own it above 193. We had a power earnings gap, and due to the market consolidating afterwards, pulling back slightly, Snow was unable to actually rally up and over 193, and so we're stalking this trade. We want to own it above 193, and we want to target, once again, there's going to be a slight pit stop at the $200 area. Expect resistance at nice big round numbers, and then climb the Fibonacci extension ladder. 250 and then potentially 300, and then potentially 328. But we're really focusing on this 250-ish area. RSI screaming at us that it wants it. Once again, look at your VRVP. Where is a majority of the volume? It's within the accumulation pattern. 200-day moving average is starting to slope to the upside. 3.25 ADR. This is a greenlit trade within TTI, but we just haven't opened it yet, right? We haven't opened it yet because we haven't gotten up and over 193 and closed there. So that's the trigger for us. Above 193, take it or leave it. I don't care. You're underneath overhead supply right now. Just keep that in mind. We're looking at the Marches or the Mays. We're going to start with the Marches. And if we find something there, we're just going to stay there. So we're looking for the 250 as a price target, 245, 250. We're going to go out to the chain and we're going to look. Well, does 250 make sense here? Not really. We want to be closer to that 0.25 delta. That's that nice risk reward for the 90 to 120 days out. And the 0.25 delta, or the 250, excuse me, is a 0.13, meaning this thing is just going to take a while to get moving. And so realistically, what we're looking at here is a 45.2 IV with a 1.6 IV rank. We don't want to call debit spread this unless we have to. If it's a cost thing, feel free, but don't do it if you don't have to, right? We like the 230 contracts right here because it's a 0.23 delta. There is open interest. I don't think that's TTI volume today, but it could be. But right now, these contracts are a little expensive at 525. So if you need to call debit spread this, feel free. You can drop the cost down here to 148 with a max profit of 852. That's better than a 4-to-1 setup. 77% chance of a 50% move, etc. You're also selling outside of the standard deviation band. We call that the golden pocket within the options chain. Not a bad opportunity here on Snow to own it above 193. The 230, 240 March call debit spreads right now 147 for a greater than 4-to-1 setup. The next setup is SentinelOne. Now this has already started to break out, and we just started opening contracts on it today. So if you're watching this on Thursday, December 7th, this is your opportunity to get in at the same time as us. We like the PEG, right? PEG being the power earnings gap. Get your mind out of the gutter. We want to own this thing above $23. It's currently drawing down post earnings and gave us an awesome entry down here. We did try to snipe that earlier today, and we got some contracts at the 65 to 70 cent range. We pull up the Tasty Trade options chain. We're going to see it in a second what it's currently trading at because I don't know. Right now it's 23 bucks, so this is green lit. We want to own it above 23 with a price target of 30, right? Totally makes sense, and then run the next Fibonacci extension up as well. And once again, we don't really want to hold these contracts down through the full gap. Right? That doesn't make any sense. The options contracts are basically going to be at 0% at that point. So we want to arbitrarily choose a number below 2150, 2146, 2137. Essentially, we either break out here above 23 or we don't want it anymore. This is a power earnings gap. We expect the market to continue this uptrend on high volume rather aggressively. So we'll see if we end up getting that. Like I said, we did start opening positions on this earlier this morning. Let's go to the chain and we'll see what they actually are going for right now. The March 15th contracts at $30. So we did grab these at 65 to 70 cents earlier. They're currently going for 75 cents. That is our volume today so far. 422 open interest, 161 volume. So we're active on the chain today, boys. 55.4 IV with a 4.2 IV rank means we don't want to call debit spread this unless we absolutely have to, but it's a fairly cheap trade, so there's no reason to. Now, this is one trade in particular we are buying on the outside of the standard deviation band, and that was simply due to open interest. Normally, we'd be buying the 29s, but there's only 2 open interest. I just don't want to play that game. We're buying the 30s. We're looking for a home run on this specific setup. It's cheap. Position yourself wisely. But look at this, 89%. 90% chance of a 50% move within this particular play. This is an awesome opportunity. Let's go back to TradingView really quick. The options chain is very amicable. You can get into this without a lot of money and see what happens. Great setup, power earnings gap. For those of you that are in TTI or looking to join, this is what we call our COD setup. So power earnings gap, build a base, and then buy the additional breakout. This is more of a gap and go situation, but we're attacking it as a COD. So we went through Gitlab, Snow, SentinelOne, and what is the last one that we were looking at? What is the last one that we were looking at? Off the top of my head, we'll talk ARM. This is not the one I was going to make the video on, but I can't remember, and I don't want to pause the video. Last one we're going to talk about here is this consolidation fractal on ARM. Now, we originally bought the 56.5 area, right? We like this specific area as a pivot point. This is our big blue sky setup again. And we bought this 56.5 break, and we're essentially in free contracts now, right? We went out to Marches. They ran up well over 100% in 2 days. We got lucky on that, but we sold half. We're in a free trade now. We're just going to let this thing do whatever it wants. Now, we've been stuck in a range here, right? It's more or less a high and tight for the last like 12 to 13 sessions. And what we're looking for here is we're looking for a continuation breakout, right? Generally, when you get this big parabolic move followed by tightly consolidated price action, aka a high and tight, you can typically draw some sort of overhead resistance and support. There should be very little white space, right? That's the key to these things. Very little white space. And as you can see, very little white space. This has a very high opportunity chance, opportunity chance, I just made that word up, to continue its breakout to the upside. All it needs is a little bit of a catalyst, which in this case would be volume. So whoever is looking to accumulate down here, they're slowly accumulating within the space. All it needs is a little kick up on volume and this thing should fly. What we're doing here is a little bit differently. We normally like to buy the breakout and on the pullback, right? So this breaks out and then pulls back. Instead, what we're doing is we're layering in buys at the bottom of the support, and we have a stop out somewhere below 59.50, somewhere arbitrarily 59.28, right? And what we're gunning for is this 73 area. So for shares, this is a relatively high setup. You can see that we're looking at the 61.50 area to enter. And like I said, 59 and some change below. Drag this up towards that next fib, and this is a 5-to-1 or a 6-to-1, depending on where you get filled. Shares trade. If we go over to the trading view, Jesus Christ, Tasty Trade, we go over to Tasty Trade, and we check out the options chain on ARM. Now, the first original play, we went out and we were buying the Marches, and like I said, these are already free. So this time, what we're looking for is we don't want to add into the original position. It doesn't make sense with what we're trying to accomplish. If we go back to Trading View really quick, we're buying a support bounce into the same price target. We have the Marches, but we're starting way ahead of where we originally were, and so it doesn't make sense to add into the exact same play. And so what we're doing is we're buying off of the support bounce, expecting a new breakout, and we're buying the 43 days till expiration, January's, the $70 calls. That is our volume, part of our volume in our open interest. We bought the $70 calls here. They look great. We're up in this play over 100% already, but there's no real reason why you cannot grab this as well. So if this is something that makes sense to you, the ARM play, the Gitlab play, the Snow play, etc., feel free. Join in these things. These stage 2 breakouts are awesome. And ARM, in particular, as a NVIDIA spinoff, about consolidating here in this high and tight with a new potential breakout into all-time highs, by the way, there's an opportunity for you to go ahead and grab this specific position or all of them. Entirely depends on what you like and how your trading style is. Guys, my name is Hamilton. I'm here with the Trading Initiative. I'm trying to make these videos to help you guys out. So please like and subscribe. Leave a comment below. Let me think. What do you think about this, right? Do you like these types of setups? Do you like the stage 2 breakouts? We do. We fucking love them. We make a lot of money trading these, and I hope you do too. I'll catch you in the next video.